All right, let's go. It's Monday, October 28th, and I sent out the new edition of MMT Trader. That has been sent out. If you want to get a copy of that, go to my website, pitbulleconomics.com. Right there on the home page, it says get a 30-day free trial to MMT Trader. So as I mentioned in my video earlier today, this is going to be, I think it's going to be a pretty eventful week. We got 3 central banks meeting. Of course, the Fed meeting is going to, be the preeminent event of the week. A rate cut is expected there. They'll bring the Fed funds rate down to 1.5 to 175 from the current 175 to 2. But that will be it. And the reason why I am saying that is because the Fed has basically been just doing what the market expects. And if you look at Fed fund futures, even going way out now, including the next meeting, December, and then further out, it looks like now futures are pricing in that the Fed will stay put. This will be the last rate cut, okay? And who knows, we could be talking about rate hikes again in early next year, which I think is going to happen. But for now, that's all the market is pricing in, is this rate cut. Now, if we don't get a rate cut, that's going to be big news, because there is a 94% probability based on Fed fund futures where they're trading right now that on Wednesday we'll see that 25. And I think it's going to happen. And I'll tell you why I think it's going to happen is because this Fed under Powell has shown itself to be completely, at kind of the mercy of the market. It just does whatever the market expects. And that's pretty much been its behavior. And I don't expect it to deviate from that. There's going to be some dissenters on the FOMC. There always are. I think that's more a political statement, kind of saying, hey, we're doing this, but we're not all in agreement. It's a political statement to try to show that the Fed has independence, because of course Trump's been attacking the Fed constantly and he's been getting his way, basically. I mean, they did everything he wants, he has wanted in terms of rate cuts, ending balance sheet roll-off, all of that stuff. And the balance sheet roll-off, I went over that. They had to do that because reserve balances were getting too low. You were causing the system to be short reserves. I went over the numbers in the last video. You got almost 13.1 trillion in deposits, 10% reserve ratio. You need 1.3 trillion in reserves at a minimum. Okay, so now 1.45 roughly is where they have it. And interestingly, in that last week on Thursday, we saw in the most recent 2-week period where the Fed has been like historically active with pumping in, injecting liquidity, reserves actually came down slightly in that period. And that shows you what a dramatic amount of reserve drain is going on. I think I mentioned in the last video that so far this fiscal year, which it's not even 1 month into the fiscal year, 208 billion more Treasury securities have been sold than the same time last year. So a big increase in the sale of public debt securities. And of course, what is that? That's a reserve drain. All right? So that's what's going on. Anyway, let's talk about the market. We made a new all-time record high in the market today. I told you that was going to happen. But you have to understand things. We're really in kind of a 2-tier. I mean, if you're a trader, I'm talking about if you're a trader. If you're an investor, the macro picture, let me deal with that first. The macro picture right now for the economy looks very good, for the simple reason that you have a record amount of fiscal support, and that's only going to keep on growing. And why is it going to keep on growing? Because the 3 principal thing, or I should say the 4 principal spending elements, Social Security, Medicare, Medicaid, okay, those are all three are non-discretionary, and I'm going to throw in defense because that's kind of like treated as a non-discretionary, especially under Trump. I mean, we just got another increase in defense spending in the new budget for 2020. Those four things comprise more than half of all government spending. All right, and that not only are they not going to get cut, but they continue to grow, especially Social Security, Medicaid, and Medicare. Now, Social Security so far this year, and again, we're not even 1 month into the fiscal year, Social Security is growing at 6% faster than last year. You're basically talking about a 60 billion increase on top of last year's increase was probably another 50 or 60 billion, another 60 billion coming in this year. Plus you got Medicare. Look, nobody talks about this stuff. Nobody talks about this stuff, or if they do talk about it, they talk about it in a negative perspective as if these things are a hindrance, right? The government's spending too much money. The deficit is too big. And that's one reason, frankly, why I think, I spoke about how high the level of neutrals, like people uncommitted, they're not bullish. They're maybe a little bearish, maybe not that bearish, but most of them are uncommitted, and it's been that way for the whole entire year. They just keep seeing the market creep up higher and higher and higher. They don't want to get off the fence. They're neutral. All right? And one theory as to why that is, like why is it that everybody's neutral? They're looking at things like the deficit. They're looking at things like record levels of government spending. I mean, you see the headlines, government on the top line of Drudge Report, record government spending. And they perceive that as a negative because that's the way they've been indoctrinated. That's the way they see it. They see it like their own household finances when it's completely different. So they're saying it can't possibly continue like that. We're broke, we're in debt, all this kind of nonsense. And so, I'm not just talking about regular folks who are uneducated in this, but I'm talking about most of mainstream or all of mainstream economics is presented in this fashion. So you have this growth. And by the way, stuff like Social Security and Medicare and Medicaid, they're just coming into the sweet spot. I mean, you have people now, the baby boomer generation, my generation, coming to retirement age, and the roles of these entitlement programs are increasing every single day, and they're going to continue to increase for years. For years. I mean, we're just getting kind of in a parabolic rise right now. So this is a major, major economic support. Now, I've spoken about that. That's the big macro picture. That's why the economy's not going to go into you need something really, really significant to counteract these massive fiscal flow. I don't know what that would be. Maybe some gigantic oil spike. And then again, I don't even know because the United States is the largest oil producer in the world. So that would actually be maybe a benefit. But then within that big macro picture there, if you're a trader, and if you understand these reserve flows, as I've been talking about, this is just money handed to you every single month or 6 weeks, because that is the regularity of these things, these flows back and forth. These are all based on government spending, monthly patterns of spending and taxation and debt sales. They're totally not just predictable but knowable because they're very, very consistent year over year. There's not like 1 year, they're going to spend this much in the next year. No, I mean, these are very, very consistent and predictable spending flows and taxation flows. I mean, so like, now nobody pays attention to it. We do. In my report, I talk about it. So anyway, that's what's going on. So go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. Not only will you get informed and educated on this stuff, start to develop some mental game. I mean, I say this every single time. But that's what it's all about. I mean, that's the key thing that's going to enable you to become profitable as a trader and as an investor. People mess themselves up. It's as simple as that. All right, everybody. See you tomorrow. Bye-bye.